So today we're going to take a look at PayPal stock and see if PayPal is set for a mega 2024. There's a lot of optimism, especially in the last week, building around this stock, and we'll take a look at the reasons why that is happening. And as one of my biggest positions in my portfolio, I thought it'd be really good to update you guys. So let's get started. Now, just before we get on to PayPal, S&P 500. The S&P 500 on Friday hit a new all-time high. So you might have seen this and you would have probably seen it in your account, because for me personally, I had a really good day in the markets on Friday. And it was good to see the S&P 500 break the all-time highs. We've not seen the S&P at these levels for over 2 years ago now. So it's taken over 2 years to get to all-time highs. And I thought when we would get to this point, I would actually make a really big video talking about the last 2 years, how tough it's been in the markets and my thoughts on it, and any changes that I personally am going to make because of what's happened in the last 2 years. So I think it'd be at some point this week a video that I do to reflect on the market from the last 2 years that we've had in the markets. But yeah, really good to see the S&P at all-time highs anyway. Now, I'm going to talk about Meta because a lot of people are calling PayPal Meta 2.0. The opportunity that we're seeing in PayPal at the moment, is it the same opportunity that we saw in Meta not too long ago? Because if you remember, Meta went to $88, and at that time frame, it was quite hard to find many bulls about Meta. Most people were bearish on Meta at $88. Now that looks absolutely crazy now, because you look at the stock and it's up 167%. It's a stock that I own, and I'm glad I own it. It's performed very well, and when you think about that, when you think about how low that dropped, I'll have to zoom out even further. But you talk about Meta, where it was the same sort of price as it dropped to, where you're picking it up at the levels of 2015. 7 years of share price gains wiped out on the stock, and I've got to say, even now, I think the stock isn't. I think Meta's about my 5th biggest position in the portfolio, and I'm up on it a really good amount. And normally when I get up this much on a position, I think, is it time to trim it? When everyone's bearish, I come bullish, and when everyone's bullish, I come bearish on the stock. And I try to do the opposite to what the market's kind of thinking, and the sentiment. It's what I always do from Warren Buffett. When everyone's greedy, be fearful. When everyone's fearful, be greedy. And normally when it gets to this time frame, I'm looking at the stock going, everyone's getting a bit greedy. No one wanted to own it at 88, and now the stock is up at 183. Everybody wants to own it. But I've got to say, Meta breaks my rule a little bit, because I'd normally go, yeah, take a bit off now, I'm just getting a bit greedy. But I mean, on a forward times earnings, you're still like around 22 times forward earnings, which isn't that bad for a company that's going to be putting in the numbers that Meta do. So that's just the point of Meta that I'd like to make. But really good performer in the portfolio recently. But what a few people are comparing it to is PayPal at the same point Meta was in 2022, early 2023, when nobody wanted to own Meta, and then it went on the big rally. And is PayPal very similar? No one's wanted to own PayPal, and PayPal's actually missed out on the 2023 rally. A lot of stocks rallied up on 23. When you look at PayPal, it had that boom in 2021. It had to take all of its tough comps because it had so much demand pulled forward because of the CV lift that happened. And like we saw with Meta, Meta was down 75% during that time frame. PayPal, very similar. The stock was down 75, basically no 75%. But what PayPal hasn't done that Meta did do is 2023, it didn't rally. Meta rallied, PayPal didn't rally, and you actually look at the stock and it had a negative year last year when the market rallied. And a few people are going, right, Meta was the big tech stock for a big turnaround in 2023. The market totally valued it wrong. Everyone was bearish on the stock when they got too bearish on it. And is PayPal going to be that same opportunity this year? And for me, obviously I do believe it will be, because it's one of my largest positions. But like when Meta was $88 back in 2022, nobody wanted to own. You look here, November 11th, 2022, Meta could see another 70% downside. Now, obviously, we never saw that, and then all of a sudden, the stock rallies all this time, and everybody is now bullish on the stock. I mean, look at this now. Only came out a week ago. Meta stock is still dirt cheap. And it shows you, like, momentum can be massively driven by the share price. And that's what we have with PayPal right now. You're not seeing so many people bullish on PayPal because it's so beaten down. If the stock was to rally, there's all those people that will chase the share price as it goes up. And sentiment can change very quickly in a stock. It's just, how does PayPal change that sentiment like how Meta did? Now, ultimately, the first thing you would say is financials. The first thing to break this trend of these negative articles and analyst downgrades. I don't know if you've seen, but there's a lot of analyst downgrades at the moment going on PayPal. How do they get analysts bullish? Well, the first thing is financials. They've got to put good financials in. As long as you put good financials in, you'll sooner rather than later get valued correctly on a stock price. The problem is with PayPal, compared to Meta, Meta actually brought financials out during this time frame when you went, oh, that's not good. You know, a few people spooked about the metaverse and everything like that, but the financials were a little bit like, balance sheet was getting a little bit worse. You're actually not getting this with PayPal. PayPal's actually posted good financials, but yet the stock hasn't rallied. So for example, if you go on the current year, we're actually this year going to close from a $4.13 on an EPS to $4.95. That's a really good increase on EPS. Really, really good. But yet the stock's not getting valued correctly. You look at the EPS for next year, or this year I guess you could say now, it's going to go from $4.95 up to $5.49. Once again, that's a really good increase. They're good financials. You look at the revenue growth, this year expected 7% growth. Next year is expected 8.2% growth. Once again, good financials and a very good balance sheet as well. If you said the EPS is growing over 10% and the revenue is growing high single digit, these are good financials. A lot of companies wish they could have the financials, but yet you're picking up PayPal at 19 times earnings. I think on a forward basis, it's around 13 times forward earnings. And the company's moving financials in the right direction, but the stock just keeps going lower and lower. So at some point, if they do these financials, the stock will, or if they keep doing the financials, the stock will go in the right direction. The only issue you've left with PayPal now is, how do you get the big money to come in? Because I've seen a few retail investors buying the opportunity, but big money still doesn't want to own PayPal. Now, that changed a little bit in the last few days, because if you look at the last few days, we did start to have a bit of a rally up, especially from the 17th of January. You can see the stock rallied up at over 15%. And what caused that rally to happen in PayPal? Well, a lot of it goes down to the new CEO, Alex Chriss. I personally think this was a really good appointment. We'll see financially if it's a very good performance in the next coming 12 months, once he's had a bit of time to get his feet under the table and the changes that he makes, and see financially if he can do it, which is the most important thing. But at the moment, he's doing the right talking. And that's the first thing to get the big money on board, is that sometimes it's not only about doing it financially, it's sometimes doing the buzzwords. And the buzzwords gets the big money to like you a bit more. And that's what Alex Chriss has done. And he actually did it the other day. If you actually look on CNBC, he actually went on 3 days ago, which once again ties in with the big rally that the stock price has gone on. He went on CNBC, he did an interview. The interview was actually quite good. Once again, I think he shows as a good talker. He seems like he's got a good game plan about how he wants to turn the business around. And he said all the buzzwords that Wall Street like. He mentioned about efficiencies, Meta, what we saw in 2023. He mentioned about AI, Meta, that we saw in 2023, and driving up the profitability and saying that we will shock the world. And he said all the correct buzzwords. And once again, this comes to the point of view that financially, eventually he will get the stock, if he does these numbers, in the right direction. The other thing is to get Wall Street on side. And if you get Wall Street on side, like Meta did in 2023, you'll also have financially good performance, but you'll also then go to a premium valuation because you say all the correct buzzwords. And it seems like that's what he was doing. He mentioned AI multiple times, which is one of the key buzzwords at the moment. But the big thing is that he's on about driving profitable growth. Wall Street love that word, profitable growth. Now, ultimately, what are the key things that he'll do to show that financially? They have actually set out I think it's like they've not actually called it an investor day, but it is an investor day on, I think it's the 25th. And they're going to show 5 key points on how they're going to do that. The rumor is one of those key points is going to be on Venmo and creating more revenue streams from Venmo. That's the big thing, is that PayPal, when you look at PayPal and the amount of money that goes through it, I think they said that 25% of all commerce go through PayPal. They've got the data. They've got the users. The big thing that PayPal have lacked in the last few years, and this is where they've fallen behind on a bit on the EPS growth, this is where they've fallen a bit behind on the revenue growth, is they've not used the users that they've got correctly. Like, these are good numbers from PayPal, but they could do better. PayPal as a business could do better and reinvent itself a little bit more and get more out of its users. And that's where PayPal's been a little bit slow, and I think that's what Alex Chriss has been trying to pick up on. So even though these numbers are good, there's definitely room for improvement from PayPal. And we've got to see that executed on a financial basis. we've got to see it hyped up by the CEO, which he is doing. And as soon as we see those numbers, we'll see that valuation turn around like we do with Meta. So everything's looking in a very good way. And if you want to go watch that interview, go watch it, because it's a decent interview. So we've kind of got the first kind of signs of Alex Chriss putting his stamp on it. And we saw that in the share price in the last 3 days. So obviously a big day coming up. Try and sell it to Wall Street on the way that they're going to be driving up the profitable growth. So they've got to show that from a buzzword point of view. They've got to show that from a financial point of view. And if they do that from a financial point of view, you know, we should see a good rally in PayPal. So we'll see what happens there. Now, from an earnings point of view, we start to get into earnings season pretty much this week. So we've got a couple of earnings on Monday. Tuesday, Verizon, 3M, Netflix is going to be an interesting one. Wednesday, we'll talk about this guy, Tesla, in a little bit, because that's definitely the big one that everyone will look at. ASML are going to be reporting. Thursday, Intel, Visa are going to be reporting. So it'll be good to get some financial information from the likes of Visa. And on the UK side of it, it's going to be a busy one on the UK side of it. We've got S4 Capital. They have confirmed they are now going to be reporting on Monday. And in fact, by the time you guys see this video, you will know what the update is. I personally don't, because I'm recording this before the update is out. So I apologise for that. But if there's anything interesting there, I'll make a video on it. If it's nothing interesting, I won't make a video on it. So we'll see what happens there. And we also have Feathertree and Wizz Air and YouGov reporting, which will be really interesting to see YouGov, because I would not mind buying a bit more YouGov on the dip. But the big one, Tesla. Obviously, I don't own Tesla at the moment. I have owned Tesla previously, made very good money on it. I held it during 2018, 2019, during the rally that happened during 2020. Sold out. I then did buy back in 2021, made another 100% return on it, and I did briefly own it in 2022 until I got a little bit worried around the interest rate. So I have owned Tesla previously before. I made very good money on it, and I would not mind owning Tesla again. It would just have to be at the right valuation, and especially when I look at Tesla at the moment, I don't think Tesla reflects the situation they're having at the moment. The situation they're having at the moment, I think they're in a bad place. Interest rates are killing them. Competition's killing them. You look at the numbers have been very disappointing in 2023. I think they could be disappointing in 2024. Interest rates are still high. They're having to decrease prices. That's going to decrease the margins. I know people will say, oh, it's part of the master plan. Sorry, not for me. The big thing I look at is the revenue and profit, and if it's not growing, I get a little bit worried. I don't care about a master plan. I look at the numbers. And looking at the EPS, you know, we've seen it go from $4.07 to $3.15. I mean, analysts are now forecasting that to go back up. I mean, you got the Cybertruck ramp going on. We've just seen once again they've cut prices. I would get a little bit worried about them numbers on an EPS point of view. I said last year the numbers are too high. I'm looking at these numbers. I don't think they're as bad as last year's numbers, but it's still not great. And forecasting, this year to go up 20% in revenue. I don't know. I think that's a little bit optimistic once again from the analyst point of view. But saying that, we saw last year the analysts guided for 40% revenue growth. I said they're way too high. We ended up growing at 20%. From an EPS point of view, we saw $4.07. I think they were forecast once again to grow, and we've seen a big, massive decrease. And when we look at a Tesla point of view from the share price point of view, Tesla actually finished up last year, which just doesn't make sense to me. But there's volatility in there, I guess. And the other thing as well, when you do look at Tesla, it has been a bit of a lost kind of 3 years for Tesla now. Like, the share price hasn't done anything in 3 years. The only time you've actually made money in Tesla is that if you've been able to buy it on one of the dips and then sell out on one of the rallies. And it is quite a volatile stock. And that's personally for me why I've not been... The last time I really held Tesla, I never really held it long, because the volatility is sometimes giving you the gains that you would potentially get in holding it for 2 or 3 years. So, I mean, Tesla, I think it will be okay in the longer term, but at some point these numbers have to start reflecting the share price, and they're starting to get there a little bit, but it's an interesting one for me. I still would like to see it a little bit lower for me to buy anyway, but this is definitely going to be a really interesting earnings when they do bring it out on Wednesday. So that's the video for today, guys. Talk about PayPal and also some earnings this week. Hope you enjoyed it anyway, guys, and I'll see you in a bit.